Hi, see you again. Okay, so today I will go through with you this November 05 paper 1 question 6 for A level POA Principle of Accounts. As said earlier, you should have your past year exam question ready for you. Okay, so now take out this question and I will go through with you. So after going through this question, you should try on your own November 04 paper 1 question 8, which I have given my suggested solution over here for you. You can go to my website to download all these copies. Okay, my website is stated over here. Go to the website and get hold of all these sample answers. Okay, and you should also try November 04 paper 2 question 6 after I have gone through this question with you. Okay, so now I'm going to go through November 05 paper 1 question 6. Get ready your question paper. Okay. Um, okay, so now in order to start, you should. Okay, let's see over here again. The question says prepare a trading and profit and loss account for the year ended 31 August 2005 and prepare a balance sheet at 31 August 2005. So most of the time when you look at the question like this, you will get very scared. The main problem is, student will say, I don't even know how to start. Okay, so now the first step is knowing how to start. So it's not very difficult to know what to start because you have already known that the question wants you to prepare a trading and profit and loss account and a balance sheet. So now you should get started. So how are you going to get started? You take a piece of paper right here, part A, write your question number. Okay, so the question says prepare a trading and profit and loss account. So write trading and profit and loss account, underline and do your title. So you put 2 column, $sign, $sign. So this is the rough format of trading and profit and loss account. It means profit and loss account is to count profit. Okay, you should also go through the accounting lesson 1 in my website there. Make sure you go through lesson 1 and lesson 2 so that it will be more easier for you to follow all these questions. So do up your skeleton like this: sales, less cost of, leave some space, then less cost of goods sold, leave quite a lot of space, about maybe 1/3 of the page, about 40% of the page. Then you come to less expenses. Okay, then you leave plenty of lines. Okay, then you leave the rest of the multi-column paper empty. Then this is part B. So you should do up your skeleton for part B. Okay. So how are you going to do up part B? So you write your title, and then you write here non-current asset. So put 3 column. Non-current asset is the new name for fixed asset. So you do up 3 column: cost, accumulated depreciation, net book value. Then about half a page, you write here current asset. Okay, so you are leaving plenty of space in between for us to slot in the figures later on. Then now, part B is also still the balance sheet. This is the second piece of paper. It's a continuation of just now. So you write owner equity, put 2 lines, and then leave about half a page. Then write current liability. So that means get ready your skeleton. Okay, it's not difficult to follow. You can rewind the video over and over again and make sure you get this ready for us to get started. All right. So now I presume that you have gotten ready your things. So everyone has gotten started. Okay. So now what is the next step that we are going to do? Okay. So what is the next step? Now we look at the question again. So then students say I have gotten started. So what's next? What am I going to do? So now I am going to see what is the easiest numbers that I can use first. Okay, So now the question asks you to prepare a trading and profit and loss account for the year ended 31 August 2005 and a balance sheet. That means what are your assets and liabilities as at 31 August 2005. Okay, now you see this question is very long. So here says additional information at 31 August 2005. So this means at 31st August 2005, your trade debtors is so much, your trade creditors is so much, your stock 1250 was taken for personal consumption, 750 insurance was paid in advance, and so that means now I know what is easy. Okay, trade debtors. I will put trade debtors in the current asset and trade creditors in the current liability. That means I will slot in these figures first. Okay, so I presume you should have this question paper with you in front of you. So just don't depend on me. You should do your part. Okay, so now having this question paper in front of you, what I am going to do is I will slot in those additional information because those are the easiest that I know how to do. Okay, I will do what is easiest first. So trade debtors, I will put in under current assets. Okay, so that trade debtors, that means people who owe me. Okay, so for those who can't follow, you should go to the website and go through all the accounting lesson 1, lesson 2, and so forth, so as to make you easier to follow during the lesson. Okay, so I'll put trade debtors here. Okay, under current asset here, I'll put trade debtors. So what is the figure for trade debtors? 23400. Okay, then now there's trade creditors. Where am I going to put in trade creditors? Trade creditors will be current liabilities. So I put in trade creditors here. So this is trade creditors. So having layout is it will make you easier for you to continue. Okay, I put in whatever number that is easy. Okay, stock cost price 1250 was taken for personal consumption. This one I hold on first. Then additional information number 4 says 750 insurance paid in advance. So now you must think, insurance paid in advance, that means I've paid so-called an insurance company, maybe like AIA, 750 in advance. So I must think, is it I owe AIA or AIA owe me? So if I've paid the insurance premium in advance before it's due, that means AIA owe me $750 on 31 August 2005. That means it's similar in meaning like debtors. So if it's a similar meaning in like debtors, you should put in the same category as debtors. So I can call it insurance paid in advance, or I can call it prepaid insurance, or I can call it insurance prepaid. So the term is not so fixed. So I call this prepaid insurance. Okay. Okay, prepaid insurance. Okay, so this is 750. Okay, so what's next? So then number 6 says provide 2,000 for accountancy fee for the year. Okay. So that means I have to something like the accountancy fee I have so-called like incurred already. But it's not paid yet, so I have to provide for it. So if I provide for it, it means something like I owe accountancy fee. So is it in the same category as trade debtors? So I put here provision for accountancy fee. for accountancy fee. Okay, so this is $2,000. So like you see, it's actually not very difficult to get started. So this provision for accountancy fee, since they said provide 2,000 for accountancy fee, it means that I haven't paid yet, but it's an expense. So that means you should provide for it, and that means you should treat it as a liability, and you should also treat it as an expense, because it means that you have incurred the expense but you have not paid yet. So that means it is a liability as well as your expense. So over here under expenses, there's no so-called particular sequence that you should follow when laying down all your expenses. It can be any sequence. So I put here under expenses in my profit and loss account, accountancy fee. So if you look at the question, they have not paid any accountancy fee, so you don't need to add in with anything. So now I put here accountancy fee 2,000. Okay, put a comma. Maybe I leave. Okay, 2,000. Okay, then now again I'm so-called a bit stuck. So what else? What other things that how can I proceed on? Okay, how can I proceed on? So this is your profit and loss account. Then I look at the question. What else am I going to do for me to proceed on? Okay, so when I look at the question, I get scared already because it looks like terribly difficult. Okay, then now if you look over here, there is like payment, all these things. So wages, I know that wages is an expense. Then general expenses is an expense. Okay. Then you have rates and insurance, fuel and power. So I think that I know this, I should put in expense. Then I will just do it because I'm going to do whatever that is easiest for me first. Since I've laid out the skeleton already, so I put in whatever figures that is easier. So under expense, I will put here, okay, I will put here wages. Okay, wages. Okay, how much is wages? 400. Okay, 400. Okay, then what else am I going to do? Okay, trade creditors, they have paid for trade creditors. I don't know what is this. So I go on to general expenses. Okay, so now I click enter. Then here there is general expenses. Okay, general expenses, how much is it? General expenses is 2,200. Then there's rates and insurance. Okay. So then I click here, rates and insurance. Rates and insurance. Okay. How much is rate and insurance? 9,001. 9,100. Then fuel and power. Okay. Fuel and power. Okay, how much is that? 3,450. 3,450. Okay, so then what else am I going to do now? I so-called I get stuck already. So what am I going to do now? Okay, I have everything here, but it seems like now I'm a bit stuck. I don't know what to do. So now what I'm going to do is I'm going to read the question from the start. The question says on 1 January 2004, R. Raja paid 400,000 to buy a retail business with the following assets and liabilities: land and building, fixture and fittings, motor vehicles, stock, trade debtors and trade creditors. The same day, he also opened a business bank account into which he paid his remaining life savings of 300,000 and a 70,000 loan from a bank. The loan is repayable in 2014 and bear an interest rate of 8% per annum. Okay. all cash sales were paid into the bank except the following. Okay. So now that means there is so-called 8% interest. So that means in the expenses there should also be interest expense. Okay. So I'm going to, because I've laid out this question, so I will put in whatever figure that is easier for me. So I'll put in as many figures as possible, and I start with those figures that are easier. So there's interest expense. So how much is interest expense? So that means this is for year end 31st August 2005, but he got the loan uh, at the beginning of the year. Okay. So he got the loan at the beginning of the year. The loan is 70,000. 70,000. And the interest rate is 8% per annum. 8%. So now can you take your calculator and calculate? So how much is 70,000 times 8%? That is 5,006. So the interest expense is 5,006. So if you see, look at the question, a summary of business bank account for the year showed the following. So that means it shows that here, the interest expense is not, this interest expense is not paid yet. If it's not paid yet, that means it is owing. That means it is owing. Okay, if it's owing, then you should put under current liability. Okay, because it's repayable within 1 year. It is current liability. So we put it accrued interest. Accrued means not yet pay. Accrued interest. Okay, so the whole interest expense is not yet paid. This, so we put here 5,600. Okay, so it says that R Raja have borrowed 70,000 from the bank, and this bank loan is repayable in 2014. That means it's a long-term liability because it is repayable within more than 1 year. Okay. So you see, because just now I have leave a lot of space, so I have space in between to slot in long-term liabilities. Okay, so I put here. So that's why I got. So you should do the same also. Leave plenty of space. Liabilities. Okay, long-term liabilities. Okay. So this will be my bank loan repayable 2014. That's what the question says. Okay, repayable in 2014. And how much is it? It's, so I can put it in the outside column. Actually, some students are very worried. They said, I don't know which column should I put, here or there. Okay, putting in which column is not so crucial, as in even if you put in the wrong column, you are likely to get the marks unpenalized as well. It's just that putting in a column arranged in such that your whole thing looks neater. So that's why all this I put in the inside column, where I subtotal I put outside, then later everything I add up together. So I will find this, very neat and nice. So so you should know that putting in whatever column will make your work look neater and presentable. That's the purpose. Not necessary you will get penalized for putting in a incorrect column, incorrect this kind of column. Okay, so so then now what else am I going to do that makes me very worried? Okay, so owner's equity, if you have gone through the lesson, the accounting lesson 1, you would have followed what is this balance sheet all about. So in the owner's equity here I will put capital at the beginning of the year at 1 September 2004. Okay, so now you think, what is his capital at 1 September 2004? So that means now you must think, how much did R. Raja used his own money to invest in this business? So I repeat, how much of Raja's own money did he use to invest in his business? So now can you think how much of his own money on 1st September 2004 R. Raja used of his own money to invest in this business? So in order to know that, you got to read the question carefully. Okay, on 1 September 2004, R. Raja paid 400 to buy a retail business with the following asset. Okay. The same day, he also opened a business bank account into which he paid his remaining life savings of 300,000 and 70,000 from a bank loan. Okay, so that means R. Raja actually invested 400,000 of his own money plus 300,000. Okay, 70,000 is not his own money, it's the money that he borrowed from the bank. Okay, this is what he borrowed from the bank. His own money is 400,000, which he have used to buy a retail business from another business owner, and 30,000, okay, he put in his business bank account. Okay, so that means his beginning capital is 700,000. Okay, is 700,000. Okay, so here I can less drawings. I can put less drawings. Okay. Some people said, oh, I thought my teacher told me must add net profit first, then less drawings. Actually, the sequence is not so crucial. You can less drawing first, then add net profit. Okay, so how drawings means, what does drawing means? Drawing means how much did he take from the business, from his business? How much money did he take from the business for his own use? Okay, so now you can look in the question. Okay, so that means how much of his own money? So all cash sales were paid into a bank except the following. So that means he made cash sales. So all of the cash sales were paid into the bank account, except he take $300 per week from the cash sales for his own use. That will be $300 per week. 1 year is 52 weeks, so in total he take 15,600 for his own use. Okay, what other things that he withdrew for his own use? Okay, so over here, this is the business bank account. Did he take some for his own use over here? No, he didn't. So additional information here. Okay, stock cost price 1250 was taken for personal consumption. This one also indirectly means he has taken 1250 from the stock for his own use. Okay, he has indirectly taken 1250 of money by way of stock for his own use. So that means the drawings would be 15600, okay, and plus 1250. 1250. Okay, I won't close bracket first because I'm afraid that later maybe I might have leave out something. So then here what am I going to do? I will put add net profit, add colon, okay, net profit. If it's net loss, then you have to put net loss. Okay, later if you realize it's a net loss, then you got to cancel it and put as net loss. Okay. Okay, so then now I come to here, non-current assets. Okay, then now I analyze the question again. You see, he bought a business. He bought a business from a business owner in the beginning of the year. What are the non-current assets he have? You have land and building. Okay, you have land and building. Okay, so how much is the land and building? Okay, 200,000 is what he bought from another business owner. Then if you look at the summary of business bank account, additional land and building that he bought is 350,000. So 200,000 plus 350,000. So land and building will be 550,000. 550, 550,000. Okay. Then I don't want to make it too cramped, so maybe I put one line in between. Then we have fixture and fittings. Fixtures and fittings. So how much is fixture and fittings? So you have to look at the question. Okay, in the beginning when you buy the retail business, the fixture and fittings is 60,000. Then you look at the summary of the business bank account. He bought some more fixture and fittings, 12,000. So together, the fixture and fittings is 72,000. 72,000. Okay, so then now what else am I going to do? So then the additional information part at the bottom of the question, it says that provide for depreciation. Okay, depreciation, that means every year the fixed asset loses value, so it should be treated as an expense. Okay, so here I can put here, okay, depreciation, colon, okay, then, okay. So this one is depreciation for fixture and fittings. Okay, fixture and fittings. And fittings. Okay, so how much is the depreciation for fixture and fittings? It says 20% on cost of fixture and fittings. So it will be 20% times, what is the cost of the fixture and fittings? It's 72,000 times 72,000. Okay. Okay, how much is 20% times 72,000? You got to use your calculator. 72,000 times 0.2. Okay, 14,400. So my depreciation for fixture and fitting is 14,400. Okay, then now I have depreciation, okay, for motor vehicle. Motor vehicle. Okay, first of all, where can you find motor vehicle? So that means at the beginning of the year when he buy the business, the business come with a motor vehicle of 30,000. So under non-current asset here, I put, so he did not buy any additional motor vehicle on his own. Okay, so motor vehicle. Motor vehicle is 30,000. Okay, so the depreciation for motor vehicle is how much? So you said that the depreciation rate is 25% times the cost of the motor vehicle is 30,000. Close bracket. So you use your calculator. So you take 30,000 times 0.25. Okay, that will be 7,500. 7,500. Okay, so now So now I also know the accumulated depreciation figure. This is the first year account. So it's not difficult. So that means the fixture and fittings and motor vehicle, the accumulated depreciation will be as such. Land and building, there's no depreciation. There's no depreciation. So depreciation will be 0. And then the net book value, that means the cost minus accumulated depreciation, you get net book value. You will be also 550,000. And then this fixture and fittings, okay, just now we have calculated the accumulated depreciation, which is just this year depreciation, because there's no accumulated depreciation brought forward, will be 14,400. And then the motor vehicle depreciation is 7,005. Okay, so this one will be 7,005. 7,500. So now the fixture and fittings, the net book value will be the cost minus accumulated depreciation will be a net book value. So you got to take your calculator and count. Okay, 72,000 minus 14,400. That will be 57,600. 57,600. And then this one, 30,000 minus 7,005 will be 22,500. 22,500. Okay, so this net book value, what I'm going to do is, in this net book value, I will calculate the total. I'll calculate the total. Okay, you see the balance sheet at 31st August 2005. It means what are your assets and liability at this 31st August 2005. That means what does R Raja business own and owes at 31st August 2005. So this is his cost, and then this is the accumulated depreciation. That means this is the cost, and this is how accumulated depreciation. That means how much the fixed asset lost value throughout the year, okay, during the year. Net book value, that means at 31st August 2005, how much is his fixed asset worth, roughly worth, approximately worth at 31st August 2005. So net book value is so-called the correct current value of the non-current asset at 31st August 2005. So this cost and accumulated depreciation, you can think of it as something like a working, to arrive at the net book value, meaning to arrive at this approximate correct value at 31st August 2005. So net book value is the crucial figure that we are going to use to find out the total assets of of the business. So net book value is my important and crucial value. Cost and accumulated depreciation, I can think of it as is something like a working, to find out the net book value. So that means you should use your calculator to add up 57,600 plus 22,500. So this will be 630,100. 6,630,100. Okay. So now I have so-called done quite a lot over here. So what else am I going to do? Okay. Okay, so what else have I left out? So this one, at the beginning of the year. So that means, can I also, you see the question says all cash sales were banked into the bank account except the following: 300 per week for Raja personal use, okay, and 800 retained as cash float. So that means 800 was retained in the business as cash. So that means the business has a cash asset. So that means the business hold cash somewhere in the drawer. Okay, so that means the current assets of the business is also cash. Okay, cash. Okay, cash 800. So the business have cash of 800. So can you also calculate the business bank balance? So that means, you see, now the question says that what is the beginning bank balance? What is the beginning bank balance of the business? Now you can look at the question. Okay, so the same day he also opened a business bank account into which he paid his remaining life savings of 300,000 and 70,000 from a bank. So that means at the beginning of the year, the business bank account has 370,000. Okay. Okay. The first year of trading was so hectic, Raja was unable to keep full set of records. Okay. So the summary of business bank account for the year showed the following. So at the beginning of the year, the business bank account has 370,000. So during the year, the business received, okay, into his bank account so much. So 370,000, I add this 605,900 plus 605,900. Then I should minus all the payments from the business bank account. Minus 893,150. So that means the business will have a bank balance of, okay, so bank balance of 82,750. 82,750. Okay. So this is it. Then what else am I going to? So do you know also opening stock? How much is opening stock? The beginning stock, I can see at the beginning of the question, okay, is 45,000. That's the opening stock. So 45,000. This is the opening stock. So how much is his purchase? Okay, so if you have followed my previous tutorial, you should be have some idea of how to calculate purchase. Okay, so if you look into the business bank account, the payment to creditors during the year, the payment to creditors, to suppliers, creditors means the suppliers that he buy from, is 457,000. Okay, then plus the trade creditor at the end of the year is 28,700. That means what he have buy but not pay yet. That means that is also his purchases, is 28,700. Okay, then you minus out of this 457,000. Okay, 17,600, which is the creditor at the beginning of the year. Okay, so that means this out of this 457,000 that he paid during the year, 17,600 was paid in respect of last year purchases. Okay, so then also you must add, you know, cash purchases is 2,009. Okay, that is what the purchases he bought by cash, plus 2,900. Okay, so that is his purchase. Okay, that is Raja's purchase. Then also, if you look at the bottom of the question, additional information, number 3, stock 1250 was taken for personal consumption. That means out of this amount that he purchased, 1250 was buy for his own use. You know, he buy so much for the company, then after that he take 1250 of the purchase for his own use. So that means that purchase for his own use is not business purchase. That is his personal purchase, which we have put in drawings, and we must minus from purchase. 1250. Okay, minus 1250. So we close bracket. So now you calculate 457 plus 28,700 plus okay, minus, okay, 17,600 plus 2,009 minus 1250. So your purchase will be, how much is it? your purchase, as I calculated, is 469,750. 469,750. Okay. So I can also like give a subtotal to this first. Okay, so plus 45,000. So the subtotal for this is 514,750. 514,750. Then here I less closing stock. Less closing stock. Okay, I don't know how much is closing stock, but I'm not panicking yet. Okay, so I will try to do sales first. Okay, because I think now I may have an idea of how to do sales. Okay, so in the question, the business bank account, receipt, checks from debtors. So this is how much I receive from my customers is 475. 475. This is how much I receive from my debtor is 500. 475, 500. So I must add the debtor at the end of the year, which is what I have sold, but not collected yet. So I add my credit, add the trade debtor at the end of the year, and then I must minus the trade debtor at the beginning of the year. That is because out of this 475, 500, 12800 was received in respect of last year's sales. Okay. then what else should I add or deduct? Okay, now then you look at the summary of business bank account. Net cash ticking. That means the ticking from the cash sales is 130,400. Okay. So this 130,400 I must add, because this 130,400 is what I have banked in after I have paid for, that 300 per week for Raja personal use and such and such. So I must add back all those because those money were paid out first, and the balance 130,400 was then only banked in. So now in order to get the amount before all those deduction, that means in order to get back my true original value of the cash sales is 130,400. I add 15,600. 15,600. Okay, no, 15,600. And then I add 2,009. Okay, and I add 800. Okay, so this is my sales. So now I calculate 475, 500 plus 23,400 minus 12,800 plus 130,400 plus 15,600 plus 2,009 plus 800. So that will give me 635,800. Okay. So I put here 635,800. Okay, so now what else am I going to do? So I'm going to leave some space because I don't know what to do next. And then leave some space. Then I put here gross profit. Okay, so now I may have an idea of what to do. Okay, now you see here in the first year of trading was so hectic, Raja was unable to keep full record. He did, however, keep to his decision to price his sales to earn a gross profit of 25% of selling price. That means the gross profit is 25% of the sales. Okay, so the gross profit is 25% of the sales. 25% times 635,800. Okay, so now you use your calculator to count, okay, your gross profit, okay, times 0.25, okay, so will be 158,950. 158,950. So this is my gross profit. Before that, I would like to put a line here. Okay, so then how much is my cost of goods sold? Okay, so here, okay, I'm going to put a line here. Then my cost of goods sold. So that means my sales minus my gross profit will be my cost of goods sold. So the difference will be my cost of goods sold. So I calculate plus 635,800. So that will be 476,850 is my cost of goods sold. 476,850. This is my cost of goods sold. Okay, so then now the closing stock will be my balancing figure. Okay, some students says that that I have a difficulty in finding this balancing figure. My mind cannot work backward. So that means in order to do that, you should imagine that this figure is X. Okay, so that means 45,000 plus 469,750 minus X equals 476,850. So what is X? So X, if you put it to the other side of the equation, will be positive. Then this 476,500 come over to this side of the equation will be minus. So how are you going to get resolve to find this X figure? X figure would be 45,000 plus 469,750. Okay, so this X figure you put to the other side of the equation, it will be positive. And this 476,850 you bring to this side of the equation, it will be minus. So, okay, then minus 476,850. That will be 37,900. So my closing stock is 37,900. Do you get 37,900? So then you can even test it. You see 514,750 minus 37,900. You get 476,850. So you are correct. So this closing stock figure will be the same closing stock figure in the balance sheet. So under current asset, you put here stock. So how much is that stock figure again? The stock figure is 37,900. So you put here 37,900. Okay, 37,900. Okay, so I'm pretty happy with this right now. So now you got to look through your question thoroughly and see if you have left out anything. Okay, I don't think I've left out anything. Okay, so then I will proceed to add up all this. Okay, so here I will actually I would like to leave a few lines just in case, for example, I have left up some expenses. I can always slot in. Don't underline exactly. So give yourself some space to put in. Okay, so I add up here, and the total I will put outside here, and also I should put it in bracket because it's less, right? The gross profit you must less these expenses. Okay. Okay, so use your calculator and add up here. Okay, you should learn by using an approved calculator, and you should actually practice so that you can add up fast, because this is crucial in the exam. Plus 200. Okay, so the figure is 103,650. 103,650. Okay. Okay. So draw a line. So here, here I will put this as net profit. Okay, net profit will be your gross profit minus all your expenses, which I have gotten is 55,300. 55,300. Okay, so now I'm going to underline. So then now this 55,300, I'll put it into my owner's equity here. Okay, 55,300. 55,300. So this one I will close the bracket, and then I will add up. Okay. Okay, bracket means minus. In accounting, bracket means minus. 15,600 plus 1250, 16850, 16850, close bracket. Okay. So I subtotal and put to the other column, because I find this quite neat. 700,000 plus 55,300 minus 16850. So I get 738,450. 738,450. Okay, then here I will also like add up, put a subtotal to this. I would like to leave one or two lines, because just in case I left out something within the current asset, I can always slot in. You must also be mindful that in A levels, you are not supposed to use correction fluid or correction tape. So you can only cancel. So that's why I always leave a few lines after each category, just in case I leave out something. Okay, 36,300. 36,300. Okay, so I will take my owner's equity, add my long-term liability, add my current liability. Okay. So I put a line, and then I put a total of this, all this. Plus 738,450. Then you get 844,750. 844,750. Okay. Then I underline. Okay, this number here should balance with the other page of the balance sheet, which is the current asset, which is the total asset part, 844,750. So now I'm going to total this. So over here also same thing. I'm going to leave a few lines, and then I'm going to do up the total. So use your calculator to total this. Okay, so 23400 plus 750 plus 800 plus 82750 plus 37900. So will be 145,600. 145,600 plus 630,100. That will give you 775,700. Okay, wait. So okay, so now let's do it in a practical way. Okay. So what is the total I got here? 775,700. So I get 775, comma 700. Okay, so why is this figure different? Why is this figure different from this figure 844,750? Oh, okay, so now you should calculate the difference, 844,750. So minus 844,750. How much is the difference? The difference is 69050. So why is there a difference of 69050? Okay, so then we must investigate why is there a difference of 69050. So can you take a moment to think why is there a difference? Okay, so while we are doing, you should also like look through a question and think. Okay, you see, on 1 September 2004, R. Raja paid 400,000 to buy a retail business with the following assets and liabilities. So that means, okay, the retail business he buy from another business owner. Probably the business owner may want to like retire or something like that. Okay, what is the net asset of that business that he buy? That means what are the total assets minus the total liability of that business he bought is 330,200. Then why was Raja like a bit like a foolish? Why did he want to pay 400,000 when the net asset of the business is only 330,200? That is because that business has a regular customer, has a trade secret, and a good relationship with suppliers. So he rather buy that business instead of starting a business from scratch. So that means he has paid goodwill. He has paid goodwill to acquire that business. That goodwill is made out of trade secret, regular customer, good employees, good and faithful employees, a good relationship with suppliers. So he's paying. How much did he pay for the goodwill? Okay, how much did he pay for the goodwill? So the goodwill, we will put it, we will put it here. Okay, non-current asset. Here we will put it goodwill. So how much is the goodwill? Okay, the goodwill is 400,000. Okay, minus 330,200, which is the net asset of that business acquired. Okay, so how much is this? This is 69,800. Okay, 69,800. Okay, so then now what will this figure add to? Okay, 775,700, 775,700 plus 69,800. That will give us 845,500. 845,500. Okay, 845,500. So now how much is the balance sheet still difference by 845,500? Then this side is 844,750 minus 844,750. So the difference is 750. So why is there a difference of 750? So can we so call like check through a bit, why is there a difference of 750? Okay, so you can also do your part to check why is there a difference of 750. So this is the practical problem you will encounter when you do this type of questions. Okay, so what you need to do is to check through, and your speed will increase when you do more questions. Okay, so you see this rates and insurance, the amount that they paid for rates and insurance is 9,001. Okay, 9,100. Okay, but at the end of it, additional information says that the insurance prepaid is 7,005. So that means out of this 9,000 that was paid, 750 was paid in respect of next year's insurance. So 750 is not this year's expense, even though they paid 9,001, but 750 was paid in respect of next year's insurance. So that's why I got the different 750. Then it was easier to trace that way. So this will become 9,001 minus 750. 9,001 minus 750, you will get 8350. 8350. Okay, so 8350. Then the expenses. Okay, well, the expenses figure will change. The expenses figure will change. This will be 102,900. 102,900. And then this figure will be 56050. 56050. So then you amend the balance sheet, 56050. This will be 739,200. Then this you will get 845,500. 845 and 500. Okay, then this will be this will be exactly the same like this figure over here. Okay, so then we have completed the full set of trading and profit and loss account and balance sheet. Okay, so thanks for watching, and see you again. Okay, bye.